Hey guys, Tara Ryan here with Fairway Mortgage, and today's tip is about why you should care about the new conventional loan limits. Many of you have seen announcements this week that the loan limits have increased beginning January 1 from $424,100 up to $453,100. But I'm finding a lot of people don't really understand what that means or why they should care. So let's talk about that briefly. Loans at that limit or below are conventional loans. What it really means is they're underwritten and sold to Fannie Mae and Freddie Mac. They follow those guidelines, and it's a very predictable process. Loans above that limit are considered jumbo, okay? Jumbo just means big loan. But what it really means is it's sold to different investors. It follows those investors' guidelines, and the guidelines can vary from investor to investor, making it a more difficult loan to originate, right? Because there's more variance in what the rules are going to be. Across the board, though, you should know this. Typically, there can be an interest rate difference. We happen to be in a market where the jumbo interest rates are similar to conventional interest rates, so today that's less of an impact. Historically, it's been a bigger deal. Jumbo loans always have stricter guidelines. Think tighter debt to income. Think more scrutiny of where your down payment is coming from. Think more scrutiny for your self-employed buyers. What does this mean? It means that there are a lot of people who do not qualify for a jumbo loan at all, but who could easily qualify for conventional financing. Okay, so this increase will really help them. Lastly, these loans are more difficult to go through the process, and they often have more scrutiny on the appraisal. Some of the big banks will require 2 appraisals, in fact, for a jumbo loan, and definitely they're going to dig into those comps and whether or not they really trust that value. So if we can keep folks in the conventional limit, that's what we would want to do because it's an easier process. But the biggest one that I see is jumbo loans typically require bigger down payments. They typically want to see 20% down. Sometimes there are options for 10% down. We have that in our product mix, but it's typically a little higher interest rate and a little less attractive for clients. The biggest deal is it's very hard, if not impossible, to find a 5% down jumbo loan. So for our clients who want to be in that higher price range but have the smaller down payment, it is a very big challenge, and this increase will help them out. So what does it mean for you? Think about it. If you've got a buyer who's only got 5% down, okay, they're now able to purchase up to say $476, 5% down, and still keep it under that $453 conventional loan limit. All right, so it's giving them some more buying power. If you're listing homes, keep in mind that $476 number. If you have a home listed at $480, $485, you might think about, hey, that $476 could be a little magic point where these smaller down payment buyers are looking. Lastly, I want you to know about piggyback loans. They still exist, and we use them all the time, especially in these price points. What we can do is if a client is close to that conventional loan limit but need a little bit more cash, right, we'll put on a second mortgage for the difference. That can be a great way to help somebody who may not qualify for a jumbo loan by doing it as a conventional with a second. Or maybe there's somebody who's going to sell their home after closing, right? They want to buy a home and then sell their prior after closing. And then they want to use those proceeds to pay off that second mortgage after closing and be left with just the one first mortgage. There's a lot of options out there. We've got the tools to be able to look at the individual scenarios for your clients, and we'd love to help.